Indeed, a very warm welcome to you. This is the Business Hour podcast. My name is Jimmy Mbogo, and this is where we get to have discussions about SMEs. And today we'll be looking at the hindrance to SME growth. But before going into that discussion, here's your business tip for the day. And our business tip for the day says, to be successful, you have to have your business in your heart and your heart in your business. That is by one Thomas Watson Sr. And today we want to look at some of the internal hindrances to SME growth. And to help us get into this discussion, I'm joined by none other than Victor Otieno AGOLLA, who's an SME researcher and consultant. Victor, karibu sana to the program.
Thank you very much for having me.
All right, and let's go straight into it. And the first thing that I want to know is, why do a lot of Kenyan SMEs struggle to break even?
Yeah, so SMEs, if you look at, basically, if you're to make reference to Kenya National Bureau of Statistics, data is, we realize that around 3 out of 5 SMEs fail within the first 3 years. And the reason for this is basically systemic and unsystemic challenges that SMEs face.
Okay.
Issues around challenges of access to finance, access to market, unsupportive policies, infrastructure that is not optimal, access challenges in terms of access to technology, as well as, just general lack of, information, as well as management, incapacity of entrepreneurs. So in a nutshell, it's a cocktail of challenges that SMEs face, that really impedes their.
Okay, there's this perception that a lot of entrepreneurs in the country have no experience in terms of running a successful business. Most of them just come from employment. Could this be the reason that a lot of these startups and SMEs go down? Yeah,
so now, of course, there are internal issues as well as systemic issues that are beyond the control of the SME. So internally, I think from the perspective of the entrepreneur, data is lacking, research is lacking. So most of us, as I said, don't rely on data, on research to make business decisions. Of course, now this is complicated by other systemic issues around access to markets, access to finance, and policies that really are really pushing SMEs back or entrepreneurs back from really succeeding.
Okay, and even as we speak about SMEs that are not doing well, there are those that have been able to, with their minimal resources, to break even and to become companies that we can actually recognize. What do you find that the ones that have succeeded have been doing differently?
Yeah, so now at the heart of business or at the heart of enterprise is solving problems.
Okay.
And solving problem means you're able to capture value. You're able to capture value in the market. So the SMEs or the entrepreneurs that succeed, they succeed based on their ability to capture value, giving them a competitive advantage over their competitors. So that basically is at the heart of a successful business, having a very solid business model that is able to solve a problem and have a sustained competitive advantage.
Okay, from a financial aspect and some of the finances that we've been able to come across, one of the key problems they have been citing is the fact that you will find SMEs that have a plan that looks very good on paper, but there's no plan on how they're going to execute it. Why do we have this problem, and how do we sort it?
Yeah, so in terms of finance, there are two. You can look at it from two perspectives. Number one is you having a solid business plan and lacking the capacity to access finance, because primarily a lot of businesses in Kenya, for them to really grow, would require bank financing.
Yeah.
So, and again, based on the way banks are modeled, it means that you need to be able to have collateral for you to be able to access finance. So you might have a very strong business case, but because you lack collateral, it means you're not able to access finance. That's number one. Number two is, in terms of access to finance, you might find that, instances where you have finance, maybe through collateral, but your business model is wanting. So again, it's game over for you. So because your business model is not sustainable. So I think that's the situation or the quagmire that a lot of entrepreneurs find themselves in.
All right, let's talk about some of the policies that we currently have. Do you feel that these policies are making it hard for SMEs to break even or to even grow and expand?
So SMEs, the SME policy in Kenya, of course, we've seen a number of attempts in terms of, giving supportive policy interventions for SMEs.
Yeah.
But I think the challenge that we are seeing is the feasibility or veracity of these policies to really reach out to the SMEs.
Okay.
A good example would be the stimulus package that government put out, reducing turnover tax from 3% to 1%, reduction of corporate tax from 30% to 25%, as well as reduction of VAT from 16 to 14%, and finally, the CBK directives around reducing the cash reserve ratios for banks to around 4%. So, of course, this was meant to release some 35 billion Kenya shillings to finance SMEs. So the challenge that comes out of that is if you were to do a quick check at KNBS data, you'd find that a lot of SMEs are informal, in the sense that we have 79% of SMEs being informal or Juakali sector. Okay. So it means these are people who are not ideally in the formal formal economy. They don't have bank accounts. So then the question is, how can they be able to access bank loans if they're not banked? How can they be able to get tax breaks if they don't keep books of accounts? Then the question begs is, how feasible is this policy interventions towards SME? And I think that has been the general practice across board in terms of, yes, we are seeing policy interventions, but the question is, how effective are these policy interventions toward the SMEs? And this is precisely leading to SMEs dying because policy is not responding to their reality.
Yeah. Okay, let's talk about SMEs that are basically a one-man show. And we understand that this has been one of the problems for SMEs in terms of growth. How do we address this, and what do we need to change?
Yeah, so now if you look at, again, if making reference to KNBS, the 2016 SME report, and just looking at the sector distribution of SMEs. Mm-hmm. So a majority of SMEs are in wholesale retail, food, accommodation, motor vehicle repair, and motorcycle repair. So that itself gives you a picture of the state of how SMEs are. So if you're looking at a wholesale retail kind of business, the only thing you need is one person to actually buy stuff from China or whatever and come sell without employing too many people. Okay. So it's the kind of businesses that we are starting that are making it difficult for you to grow if you're to compare that to a manufacturing entity. So if you're to start a manufacturing company today, it means that you can be able to absorb more people into your business. Okay. So and that's why I was saying when we started is we are not doing research very well in terms of looking at sectors, economic sectors that can really grow and create more employment. So that in itself is the challenge that we are facing. So what I would advise an entrepreneur is to enter into sectors where you can be able to capture more value. And this is agriculture, and this is manufacturing. Okay,
let's talk about the issue of pricing. A lot of our clients complain that SMEs do not price their services or their goods as well compared to these other companies that are already in the market. How do we address that?
So now the challenge, if you look at data, 79% being informal, it means they're not able to keep books of accounts. So pricing is a factor of cost. Okay. So can you be able to document your total cost, spread that cost across your product, and have a profit margin? Yeah. So now that basically should inform the kind of price that you put out there. Of course, in consultation with your competitors, etc., etc. So without you having costs, it means that your pricing will be very haphazard. It will be knee-jerk, and you're not even sure if you're going to break even. And I think that's where that's the challenge. That's where the challenge is.
All right, and we know in business, cash is king. But the question is, so many SMEs are getting clients, but these clients are not satisfied. How do we address this? Because a lot of SMEs are getting clients, but keeping them is becoming a problem.
So the way I would look at it is looking at the competitive advantage that an SME has built. Yeah. So if you're able to solve a customer's problem or challenge satisfactorily, and they have the ability to pay, then you should not have cash flow challenges. But the challenge that we have as entrepreneurs or as SMEs is we only compete based on price. Yeah. So if I open a car wash, today you'll open a car wash next to me. So it means that we're not competing on anything other than price. The driver would not come to me because of any other thing other than me pricing at a price below the price that you have. So it means we are in this cycle, an ending cycle of cutting cost. Okay. With with no success looking forward. So for me is develop a competitive advantage that can be sustained over a long period of time.
From the SMEs that you've interacted with, do they have a short-term plan and a long-term goal for the business?
If you look at the way most of us go into business, like during this season, most of us are retrenched. So you are not coming to start a business because you want, it's because you don't have an option. So it's a knee-jerk reaction, it's a survival mechanism or a survival path that you've taken, which is very dangerous. Yeah. So the same way for other people who have not been able to get employed. So they're looking at them running at their shop as a short-term thing as they wait for formal employment. So as long as you're in that state of mind, you don't expect success in business.
Okay. So I'm going to give you, let's say, 100,000 in terms of this is your profit margin. I want you to paint a picture for me in terms of what percentage of this 100,000 should go to my recurrent expenditure, what percentage of this 100,000 should go back into the business, and what percentage of this should be able to help me grow.
Yeah, so that's a complicated question, but what I can, because it depends with sector, it depends with the business model, etc. Yeah. But if you are to look at where I sit as a business consultant, and of course cognizant of the situation that we are in terms of COVID, I think what I would do is I'll cut back my personal cost, because that really determines if the business is going to survive or not. Because you're in business because you want to be able to sustain your family, you need to pay your bills. So as long as my bills are very high, then it doesn't really matter whether you give me 100,000, 200,000, 300,000. As long as my personal costs are very high, it means I cannot be able to sustain my business. So for me, the first decision I would do is to figure out how can I be able to live at the minimum cost. If I'm living in an apartment that maybe is a bit expensive, can I be able to downgrade? Can I be able to move? Can I be able to change my kids' school? Can I be able to eat less junk food and just cook from home for me to be able to have room to be able to expand my business? So then the next question for me would be now, I would take almost 80% and reinvest back into the business, as well as try to figure out how I can be able to access new markets, other than your traditional markets that you currently are serving. Okay,
Victor, I know you've done a lot of research in terms of what SMEs are doing wrong and how they need to change this narrative. From where you sit in terms of just SMEs being able to grow, what do they need to start doing that they haven't been doing in the past?
So what is absolutely critical right now, especially that we are in the COVID pandemic, is we already know that 3 out of 5 businesses were dying in the first 3 years. Yeah. Now we have COVID, we have all these other challenges. CBK government was estimating that over 70% will die by June. So theoretically, you're looking at by August, most business closing. Yeah. So it means that either due to change in customer preference and taste, it means some businesses are going to close. Yeah. Especially businesses that are in retail wholesale, that are relying in terms of getting the inputs from outside Kenya, China, Vietnam, etc. So those are going to struggle, and chances are they are going to close. Okay. So for me, using data to figure out what are the new market trends, where can which sectors do I need to invest to be able to have a sustainable business? And we've gone ahead and done. We're currently doing a series around the same. So we are trying to identify sectors that SMEs can be able to access. One of them is the coconut. The coconut value chain is very lucrative. It's a $30 billion US market. If you look at the current practice in Kenya, is we are not optimizing coconut. We are only selling coconut as a fruit. Yeah. We are selling coconut palm wine, which has a short shelf life. So if you look at our report, we are looking at coconut from cosmetics point of view, because that's the as the trend that the global trend towards how to optimize coconut.
Yeah.
We are looking at hydroponic farming, farming with having little resources. We are looking at startups. Can you be able to access, or can you be able to start a business that is either tech based or tech founded? So for me, the emphasis is can you be able to rely on data and research to be able to make the best decision in terms of what kind of business you're going to start.
Okay, let's talk about growth. And today we're just looking at the hindrances to growth. At what point then should I now start expanding? After what checks should I need to, in terms of the metrics that you look at, to now say this is the time for me to start expanding?
Yeah, so I think a business expanding is a byproduct of being successful in terms of addressing customer challenges.
Okay.
So for me, I think the only challenge that I would see, you don't need a queue for you to expand your business. The question that you should be asking is how can I be able to expand sustainably? So that we're not you're not going with hype, opening branches all over, but can you be able to expand in a rational sense? So if you are a retail company, do you have you documented the mix of have you segmented your customers in a manner that you can be able to expand in a sustainable way? That for example, if you are a retail company and you're serving the maybe low class, what kind of mix are we looking at, which would inform your expansion, so that you don't expand in a market that is not yours? Number two is also looking at putting in systems so that you can be able to sustain your growth. So that it's not a one-man person running the organization, but can I be able to put in accounting system? Can I be able to put internal controls? Can I be able to hire the correct talent? So that even as we grow, we grow sustainably. So for me, those are the two issues that probably I would look at in terms of company growth.
All right, Victor, from a research perspective, we are currently in a pandemic. A lot of SMEs are struggling financially. What do they need to do to be able to sort of sustain themselves going forward until we get through this?
So now you can look at it from two perspectives. Number one is trying to do scenario building. So scenario building is trying to just ask yourself, what if you are to go on a complete lockdown? How would that implicate? What is the implication of that to my business? And try to look at do stress tests around issues around your team, your supply chain, your assets, etc. So that you start anticipating instead of sitting and waiting. So if you anticipate that you're going for a lockdown, how can I be able to use my assets differently? Can I we've seen people who are doing fashion and are now switching to do masks. So that is someone who's trying to build scenarios to figure a way how to survive. There are situations that would call for you not to do risk management, but would require you to consolidate. In the sense that my capital is going down, I'm struggling in business. Can I be able to look for similar business that we can be able to come together and work as one unit? So that is what we are calling consolidation. So those are the two scenarios that we are looking at in terms of business trying to to survive. But most importantly, I think before I forget, is looking at the cue given by government through the budget policy statement, which is also very important. So government has. If you look at the 2020 government budget policy statement that was given by the Cabinet Secretary of Finance in February, we are looking at government giving incentives around tax breaks around confectionery. So there's some reduction of excise duty around the same. We are looking at government really trying to create the internet backbone. So it's trying to encourage e-commerce. So those kind of cues can also give you an indicator as a business of where to invest.
Going forward in terms of investment, 2020 already has been a difficult year. So an investment opportunity that you yourself would consider, what are some of the things that you'd be looking at? So now, looking at investment from an entrepreneurial point of view, like I indicated, we are currently in the middle of doing research around importance in terms of sectors that can be able to absorb the current shock as well as future shocks. So the first sector that we have identified is in agriculture is coconut value chain. We've identified hydroponic farming as and this would apply for in urban setting as well as startups. We are currently also considering logistics because of travel restrictions, etc. So logistics and transport is going to be a very important sector that an entrepreneur would consider investing in. Okay, so I have 100,000. Do I invest all of it in, let's say, coconut farming, or do I invest 15 coconut and the other 15 transport?
So that's a typical challenge that the Kenyan entrepreneur likes. We like spreading our capital too thin.
Okay.
So if you look at Facebook or you look at Amazon, they only invested in one business.
Yeah.
As long as you can be able to satisfy the customer well, you can be able to capture value, and the growth is endless. So for me, what I would do is put everything, all your resources into one, satisfy the customer very well, and you'll be able to reap the benefit of that venture.
I'm guessing you're the kind to go for high risk, high reward.
Exactly.
Well, indeed, that's a good point to end it. Victor, thank you so much for gracing our show. And that's how we wrap up this edition of the Business Hour podcast. My name is Jimmy Mbogo, and remember, every hour is Business Hour.